Indiacharts publishes Nifty Daily, daily video updates, the weekly Elliott Wave outlook, and the long short report covering all asset classes.
Good morning, and this is the 15th of September 2021. We are seeing the 5th day of gains in the Nifty PSE index, something I did a small YouTube story on yesterday, and I also posted, I think, the index chart showing that it's extending. Now this chart shows the particular wave count. When we say extended, it means we've done an initial 1, 2, 3, 4, 5 waves up, which I've marked as 1 and 2, and then we started a third. I've tried to say whether you would form 1 and 2 of 3, but that's not really clear whether you're subdividing or you're simply going to go straight up. Looks like straight up now, and we've surpassed the high that we'd made in the month of June, further confirming that this is a larger degree wave. Now, is it a fifth or a third? Because I can take this as 1, 2, 3, 4 as well, because this high and this low are not overlapped. Or I can take it as, 3 of 3. If I take this entire wave as 1, 2, then 1, 2, and a larger third. I'm keeping those options open. I'm also keeping a further option open as to whether I should mark this as initial, 1 and 2. So that would then further change the way we look at it. Now, the important thing with the PSE index and, many such sectoral reversals that we've seen is that they actually made an orthodox bottom in October of 2020. So the public sector index, my sense, is bottomed there, not at this March low. It formed some kind of wedging structure, sold off one final time. And that is the final bottom from where the impulse has started. So in each of these impulsive rallies, if you note, have been pretty strong. It's only that you've got pullbacks in between that sort of, get a lot of people bothered, because some individual stocks end up having very deep retracements. Like in this wave 2, we've seen a stock like BHEL do almost an 80% retracement. So that is the only thing that you have to go through with. But whenever these rallies come in the PSU index, we can see they're pretty strong and one-sided. So that's somewhat what is going on. Now, among the interesting setup today is, of course, the Nifty is holding out strong, which means it's on the hourly chart, breaking past, holding the 20-hour average, breaking past the highs. Now, it's not gone past this high yet, as I see right now, 17,438. That would be interesting, but holding on, making higher highs and higher lows, the trend remains intact. The hourly momentum, whipsaws, comes back to buy mode. So that those are good things. The main driver that has been missing has been the Bank Nifty, right? So the Bank Nifty I've marked as wave 4. Someone was debating with me yesterday online. I wouldn't call it a debate, but suggesting that why can't I mark this this advance as an impulse done? Because if you go to a lower degree, you can possibly mark this rise as 5 waves. It's possible. I have taken it as a triangle, but I have taken it at a higher degree as a fourth. So 1, 2, 3, 4, and I can actually move this ahead now that it looks more triangular. The reason I put it here is this move on the hourly chart looks like 3 waves, and what he was suggesting to me that you can take this as 1, 2, 3, and then 4 and 5. Different possibilities, but net result is the same. If this is a triangle, then we are sort of doing 4, and 5 should take off from here. But again, why can't we mark 4 here and just like in Nifty do 1, 2, 1, 2? Yes, it's possible. We can do that. Now the same look I can also see in a stock which is State Bank of India, right? So in State Bank, we can also see a triangular setup, though it is slightly upward slanting. And here, because of this spike early morning, we have gone below this swing low. So it makes this rise 3 waves. So in this case, possibly the triangle is the only option. So we mark it like this. It's slightly upward slanting, so I'll call it a running triangle, which is slightly a little more bullish than a regular triangle. And what we then have to see is that it holds the lower end, breaks out past the upper end. So the upper end here is at 436. We'll watch for that breakout, which would mark the start of 1, 2, 3, 4, and then 5 up. So will that 5 up, at a larger degree be a impulse for a new rally altogether? It's very, very much possible. So we'll keep that all open. I'm not putting larger degree markings here, but yeah, this 1, 2, 3, 4, 5, we should see a fair impulse development. We can use a channel around it to set some kind of fair projection for this entire move, and that sort of gives us a path in terms of how we should go from here. Another post we are writing about today is the DJI, that is the Dow Jones Industrials Index. More because of its immediate setup, it has pulled back to the moving averages or Bollinger Band, and possibly the 20-week average if we actually go to higher time frame charts. Okay, so if we actually look at the day chart, okay, of the Dow Jones here, we've even broken the Bollinger Band, but then each index is different. If I go to the S&P, it's sort of at the 40-day average. Question is this going to hold? Do we really have a structure to talk about? Now, if I move to the weekly chart, we are also at the 20-week. We've traded below the 20-week average, I think, last week also. So that would actually signal some kind of weakness going ahead. But what really interested me, at least for the day, is that when we go to the day time frame, so I'll actually move back to this chart, I can actually draw a downward slanting channel, from here to here. And we are sort of at the bottom end of this channel. Okay, so even though sometimes averages break and so on, these patterns can often play out, and so we're going to pay attention to this. We're going to see whether this plays out, and what we really need is the Dow to bounce back positively, because it's reacting to some short-term news as of now, which is where these panic moves happen, like this, where it opens higher, you get a big down candle, like it's a 300, 400, 500 point day, but actually speaking, net it's only marginally lower than where it was 2 days ago. Okay, but in terms of structure, and so this tends to happen in fifth waves, which is why it creates that feeling of panic when it's actually nothing, is what I'm trying to highlight. And of course, we need proof of that by an actual price reversal. But what we have here is a 5-wave decline in wave C of this ABC correction right into the bottom end of the channel. Now, if this ends up holding, then what we are really looking at is another breakout move, very similar to what we got some time back when we look at this parallel channel here. Very similar setup, went to the lower end of the channel, then broke out. Now, of course, these advances are getting slower and slower in the US indices, which is exactly what happened in 2005 to 2008, because the dollar was falling, and in a falling dollar environment, sometimes money moves away from US equity to others, even though US has been the best place to be in over the last year or so. But if that happens, then you see this pace of the US indices going up, unlike what we saw in the initial stage, slow down, but the trend may not necessarily change, is what I'm trying to say. So you'll have another flag, another breakout rally possibility here on this setup that I'm showing on the Dow Jones Industrials average. So while I'm recording, we've already got the Nifty surpassing this previous high. So this wave count is in place, 1, 2, 1, 2, 3, going on in terms of extending into this fifth of this particular setup. So it's clearly not over. It's got multiple waves to go, which should manage to propel it towards 17,620. That's the level I've been putting out as the next, goalpost for the Nifty. And the only concern, I think, that was there a while back, which was actually related to the dollar, which we will continue to watch. And I'm actually watching the euro for a clearer setup, because the euro dollar has a potential 5-wave advance more clearly visible on the hourly chart here than on the daily chart. And so it's wave 1, 2, 3, 4 and 5, and we've pulled back in ABC. Now it's attempting to break out of this and start a third wave higher. So far what we may have is just the initial first and second wave. This is sort of a 61.8% retracement of this advance. So we'll have to watch this support 1.179. That holds and we attempt another move higher, then we should break out of this range and start trending higher in what should be minor wave 3 of the third wave. So as we start trending higher and we hold out outside this falling channel, then it will become, give us more confidence that the third wave has started, and immediate rub off of that then should be on, various markets, emerging markets, commodities in general. And if we really move to commodities, there's been a mixed thing happening there. A couple of bullish setups for sure, but what we are seeing when we look at lead futures is the potential for a wave B triangle, and this does pose some near-term risk. Okay, now when I look at other commodities, I wonder whether this should give a deeper correction, but sometimes individual commodities can do their own thing. So for some reason, lead is formed a triangle now, breaking the downside. So if it's breaking the downside, what it ends up doing is another ABC correction. It could go much deeper to the lower end of the channel, where maybe wave C and A, achieve equality. So something like around 2170 is what it's beginning to look like. Till it's complete, we'll have to be open to the idea that you can get a wave C down in lead. But this is not what you see on every chart. In case of copper, I did mention that there was this small little flag, and moment we reached the lower end, it broke out on the upside. But at a larger scale, what we haven't done yet is we haven't broken out of the bigger channel. So are we still at a risk of a pullback? So that needs to be watched. Maybe, maybe not. It's not necessary. What we'll have to watch for is whether you continue to make higher highs and higher lows. So you can even use this rising trend line as a benchmark. We've held this line intraday at least today, and if it holds, then copper will continue with its upward trend. So lead appears to be the outlier. Aluminum seems to be the leader because it's continued to higher highs, and as it's done that, it sort of moved inside a broad channel for this entire time period. If we draw it, most of the resistance has come at the or near the top end of the channel. So repeatedly it's hit this, pulled back to the lower end, again gone to the top end, and this channel has broadly played out. Question is, will we again get another pullback to the lower end of the channel? Oil prices are also in a tricky spot. What we can end up thinking about oil is that it recently fell in a double zigzag to the bottom end of this channel. So yes, it's broken out of that, could have started the next leg up. But alternately, and I wonder if that's the case, not my best scenarios, that are we still forming a broader triangle? Now sort of we can rule that out, or at least reduce its probability once we go past the 61% retracement mark, which is sort of where we are here. So this 61% retracement at around $71, and once we trade above 71 or 71.10 or close above it, then the odds will increase that this is not a counter trend bounce, and we are actually looking at something bigger, which means take this as the initial wave of the next rally. So I'll end up marking this as 1, not C, and then marking it as 2, and we'll probably move on from there. So we'll have wave 1, wave 2 of the next rally, and then the third wave will possibly go all the way up to $75, $76. This is what the alternate bullish possibility is, given what we are seeing in commodities in general. Now this can sort of push back on people who are looking at weaker inflation. We've seen inflation data cool off, but when it comes to oil, it's really about how fast prices rise, right? So if they are going to just slowly move along, I don't think the markets will have a problem with oil prices going up. If I broadly take this channel, I think both these highs and both these lows are on top of it. So in a slightly bigger picture, we are looking at heading towards $90, or rather the exact is around 87.90 is the top end of the channel. We'll attempt to go there over maybe the next couple of months, and that will cause some pressure. But in general, if you have economic activity picking up, oil prices end up being reflective of that and generally get absorbed. So it's really a function of whether that's happening or not. Otherwise, if that's not happening, then they become an issue. So oil is actually a lead indicator, and usually rising oil prices have been seen to strongly correlate with rising equity prices. Last but not the least, that crazy thing called Bitcoin, and how I've marked it here, because this fall was 3 waves, this rise was 3 waves, is an ABC expanded flat. Now near the wave 4 low of the previous rise, typically many times bottoms can form. There's no reason why wave 2 cannot be a deeper cut, but this is where at least one leg completed. So till we really get signs that there's another leg down coming, wave 2 should be considered complete, and wave 3 should be in early stages of development. And we'll continue to watch that. Last night's bounce back here is a good sign, because when we go to an hourly chart, it's again at this level, possibly a downward channel here would have completed. So you have sort of an ABC correction at the end of this expanded flat. So maybe it's ABC, X, ABC, or maybe we can draw a triangle around it. That may not be so appropriate. So some kind of a complex correction over, and then is this the start of another move, or we are still within a complex pattern that will form for a while? So we'll watch if momentum indicators also confirm this move, but right now having broken out with this small flag on the way down is a bullish sign that possibly wave 3 has started. So at least it's not negative. That's the first indication. Negative would be possibly failure to go back below the previous high. Now once it surpassed that, then the previous lower low, lower high pattern would also break. So you can watch out for a move above 47,397 as a sign that the next move up has also started. So that could be an additional confirmation. So to conclude, what the Nifty has been doing, it's been breaking past this initial channel for this move, and in doing so, it's also now heading higher here inside an even broader channel. So take this final leg and actually, get it on into perspective. I'd have to draw one more here just because of the action of the last few days, and this would then end up being my final trajectory for what is going on. And this final then point would actually stretch. If I think of the top end of the channel, it's as far as 17,800, and the new one which I just drew here to this low actually goes a little higher towards 17,900. So that's pretty much a lot. But in terms of pure fractal analysis, for a long time I just thought we would go towards 17,620, 17,640, simply because that's where the third wave would be equal to this first wave, and that's going to be the first level at which we are going to be watching out for something. But it's interesting that we are seeing 17.9, 17.8 show up on the channels, because the maximum call open interest, if we really look at it, has been building up or had built up a while back at the 18,000 mark. And so this became then the main resistance point on a broader basis. Here we are seeing some reduction, but actually why this line is appearing lower on a refresh is that we are seeing huge puts now at 17,400. So till yesterday, 17,400 is where the maximum call open interest was, followed by 18,000. Now we are seeing put open interest exceed call open interest at 17,400. So 17,400 has gone from being a resistance to being a support, and we are probably not going to go below that. And the next thing is going to watch is again 17.5 has seen some built up here. So I wonder whether that's important from the current week expiry perspective. But overall, it looks like there's this 18,000 mark where the biggest why is whenever you cross these resistances, the next big one comes at here, and do we get there by this month end is going to be interesting.